All right, hello everybody. Welcome to the new trading year. This is the first market bias update report for 2024. Coming in on a Monday since it is New Year's Day and the markets were closed. I decided to take an extra day off this weekend and just hang out and celebrate the holiday. But futures just opened up about 30 minutes ago for the trading week. So let's dive into our market analysis. Starting off at the S&P 500, obviously markets are still overextended. We've had just monster run over the last couple of months here to close out 2023. Markets are looking a bit tired to me, and I would not be surprised to see a little bit more of a pullback. We might end up breaking this 9 EMA this week if my analysis is correct. And I say that mostly because of the weekly chart. So if we drop out to the weekly, you can see just massive run. It has been a long time if we go back in chart history since we've had this many green bars on the weekly chart in a row. We're up 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 weeks in a row and just barely green here, starting out the last half hour here, starting the new year. So week 10 potentially of upward movement. And, after such big move, you have to have some kind of support level form, and it would be healthy for the market to pull back into the rising 9 weekly. So anything pull back into like 4675 to maybe 4700, potentially about 120 points down from where we are. And one of the reasons that I wanted to put it out on this weekly chart is you can see the slowing momentum. And I'm going to zoom in here a little bit so you can really see this. So huge momentum candle, increasing momentum here, slow down, gapped up, big momentum candle, and then slow down in momentum here. Each day has gotten a little bit smaller range, right? And that's showing the bulls are tired. And again, we need some kind of a pullback. So I'm not interested in playing anything to the upside from here until we get a pullback for at least 3 days on the daily chart, but hopefully 3 to 5 days coming back down somewhere in between that weekly rising 9 and this 20 period SMA on the daily chart. Somewhere in that zone would be really healthy for the next start to another bull run. So I am looking personally for a pullback into that zone before I'm going to be trading this market. Also, if you look at the MACD on the daily chart, you can see we did set a higher high here, but just barely. And we've actually rolled over a little bit. And I'm kind of seeing this like rounding top action here with decreased volume going into the holidays. And that also signals to me that we might get a little bit of a pullback here to start out the year. Again, that would be super healthy. Very similar conversation out on the NASDAQ. You can see similar rounding top here, similar MACD action and RSI action. And to me, this just says the Bulls have had a hell of a run, and we need to see a little bit of time off. So I'm not going to spend too much time diving into this, but any pullback on the NASDAQ down to the rising 9 or even slightly below, basically to the high of this pivot candle here, which correlates to about 16,000. So any pullback into that range, I'm going to be interested in buying the dip and looking to see the big tech names like Apple and Amazon and Google and Microsoft kind of step back in. But like I said, they're all tired too. Looks like their charts need a little bit more of a break than they've had. So looking for a few more days of consolidation and hopefully a little bit of a pullback here to reset the charts for us. Going out to the Russell 2000. The Russell has some catch up, whereas the Nasdaq and Dow Jones and S&P 500 are all pushing to new all-time highs. Obviously, we are still off from the all-time highs here on the Russell 2000. So there is room for catch up in the underbelly of the market here. We're still about 20% off of all-time highs. So really interested in the Russell 2000. That's kind of the main focus for me in terms of the four major indexes. And we had a couple of days of sell-off. I don't know if I'm going to classify this as quite enough for me. I would love to see 2 or 3 days of just consolidation on top of the nine, or a slight pullback into like the 2000, 2020 level. Any pullback into that zone, I'll be really interested in the Russell 2000. If we go out to gold, gold is actually really interesting to me. I like the little pullback into the nine here, setting up, and I think the macro environment for gold is going to be really, really good. And I am specifically interested in the gold miners. If we look at GDX, which is the gold miners ETF, and put this out on a weekly chart, this is a 5-year weekly chart, and you can see we have been just consolidating underneath this 200 period moving average at 32.31. I really like a potential break above that level and then playing back up to like 37 and change, basically up to the diagonal line right here that is acting as resistance on the long-term chart. So I think there's a decent play coming up here. That's about a 16% potential move in GDX. So I really like GDX. And then just to compare that to gold ETF itself, GLD. It is setting up for a potential breakout here of major, major long-term consolidation. And if I put this out to the monthly, you can see that nice kind of cup and handle formation setting up to break out. But I prefer the gold miners just because there's extra catch-up potential there. So going out to crude light. Crude light is actually really interesting to me right now. It's still sitting on top of its 50 monthly, getting pinched between that and the 200 period monthly that is just above current price. If we drop this to a weekly chart, you can see we're actually also sitting on the weekly 200 for support. That's a nice support zone right there. We do have some overhead resistance with the moving averages, which I don't particularly love, but when crude light bottoms and decides to start going, it can blow through those really quickly, like you saw in this last run that we had back this past summer. So, anyways, I'm not going to shy away from the trade because of these resistance zones, just making a note of them to potentially have areas where I either take profit on shorter term trades or at least tighten up stops as we get up into those to make sure that whatever trade I take ends up staying positive and doesn't roll over on me. On the daily chart here, I do like a trigger potentially above the 9 EMA here. Target one coming back up to around 76, and then eventually maybe 77.5. So somewhere in that neighborhood on crude light. If we go out to Bitcoin, Bitcoin is firing off. We've been saying it looked tired and needed some time off. It took time off. We had basically the last 3 weeks, a little over 3 weeks, almost a month of consolidation here within this range, and looks like we are fighting to break out and make that next leg higher. Target for me somewhere in the neighborhood of 47,500 to 48,000 makes sense to me. If we toss this out onto a weekly chart, really there's not much until we get to the high up here, and that's actually at 48, 475. So I'm actually going to put an alert there for myself. 475 right there. So that would be kind of my main target, and then anything after that would just be gravy on top. But does look like there is going to be some new trades in Bitcoin, similar to that going out to Ethereum. Ethereum had kind of a messy breakout of this symmetrical triangle, retested it, showed it as support, and caught the 9, and is now broken out and moving higher again. Ultimately, I see higher prices in Ethereum as well. If we toss this out to a weekly chart, you can see we're really just now starting to challenge the resistance here at 2,500. If we get past 2,500, really the next stop isn't until 3,500, with maybe some profit taking around that 3,000 mark, just because it's a really nice psychological whole number. And we also had a little bit of a shelf back here where price kind of bounced around and confirmed off of that. So 3,000 and then 3,500 for Ethereum. Going out to natural gas real quick. Natural gas is actually looking interesting to me again as well. It's just taken some time off again to consolidate the last few weeks here after a major downward turn. And I like natural gas anytime it gets to low prices like that. So, anyways, looking at potential trade trigger here, actually basically triggering right now as we speak. This candle is triggering in technically as a bullish entry, targeting up to the decreasing 50-period moving average on the daily chart. Just for kicks, let's actually look at the metals here too. So this is palladium futures, had a monster run, took some time off, couldn't hold it, trying to test that 200-period moving average, rolled over. I like this support zone right here, goes back, all the way back to October, basically. Retested it as resistance here on the opposite side, and now we are testing it again, trying to confirm that as new support. If new support holds on here and we break back above and close above the 9 EMA again, that'll be the trigger in, and then targeting back up to the 200-period moving average. So actually really like potential play on palladium here if we get some development in the next couple of days to reset this and give us a nice clean trigger above that 9 EMA. And then similar on platinum, platinum broke through a fairly significant resistance zone here, right at that whole $1,000 number. If we toss this out onto a weekly chart, really you can see, any pullback on the weekly chart is going to have a ton of support under it here, just under 1,000. And I really like the look of this to be able to come back up to between 1,100 and 1150. So really like any potential trade setups that might develop here off of this pullback on platinum. Finally, let's go out and look at our economic data coming out this week. Obviously, market is closed today for Monday, so there's no economic news here for the holiday. Tuesday, nothing really to note. Wednesday, we do have importance coming out for ISM manufacturing, PMI data, FOMC meeting notes as well. So those two will be important on Wednesday. Thursday, unemployment claims and non-farm roll will be important. And then Friday coming in with several things here, the non-farm roll, employment change, average hourly earnings, unemployment rate, and ISM services PMI data. So Friday is going to be the big day this week. Keep an eye out on that. I'm not expecting, excuse me, I'm not expecting any of this to really impact the market strongly one way or the other. I think it's going to be kind of coming in line with expectations. So I'm not expecting any of this data to really play a huge role this week. I think this week's going to be mostly technically driven just based on the fact that the charts are overextended and need a little bit of time to chill and reset. But I do think we're going to have some really good trading setups coming out the next week or two here. So keep an eye on that. Finally, going out to end on the heat map. And this is a 1 week performance, just looking at the last trading week of the year. You can see a lot of green over in the consumer defensive and healthcare and industrials, real estate, utilities. Banks have been really hot lately. They've had a great run, and it doesn't look to me like that run is over, but it does look like we might need a little bit of time for that new trade to set up as well. And you'll notice the big tech actually has taken some time off. It is still taking a breather. And so that next push up in the market will probably come when these big tech companies like Google, Meta, Amazon, Microsoft, Apple, when these guys get chart patterns to renew bullish trades. So once these guys jump back in and start participating again, that's when I expect the indexes to take their next leg up. So anyways, hope that helps, guys. Trade safe. Happy New Year. And I hope you guys have an awesome start to the new year. As always, let me know if you have any questions or if I can be of help in any way.